Welcome to Richie Shot.
This week is all about gold and breaking records. Of course, there is a Trump spice in the news, too. If you are ready, let's dive in. Gold Rush 2.0. Could bullion soar to $5,000? According to Reuters, gold cooled off slightly on Thursday after a dazzling rally to fresh record highs. Spot prices slipped 0.3% to $3,546.73 per ounce as of 01:53 GMT, following Wednesday's all-time peak at $3,578.50. U.S. gold futures for December delivery also eased 0.8% to $3,605.60. The pullback was largely the result of profit-taking, but the buzz in the market is about how much higher gold can go from here. For many traders, the September 17th Fed meeting is the next big catalyst. The U.S. Labor Department reported job openings fell more than expected to 7.18 million in July, adding to signs of a cooling labor market. Fed Governor Christopher Waller went so far as to say he thinks the central bank should be cutting at its very next meeting. Traders appear convinced. CME's FedWatch tool now shows a 97% probability of a 25 basis point cut. With lower rates eroding the appeal of bonds, non-yielding gold tends to sparkle brighter. That has investors asking, is $3,800 the next stop? But the story doesn't end there. Goldman Sachs analysts, led by Samantha Dart, have painted an even bolder picture. In a note this week, they argued that if the Fed's credibility erodes and even 1% of U.S. bond holdings were to shift into gold, the metal could surge to nearly $5,000 per ounce. Their base case still sees gold climbing to $4,000 by mid-2026, with a secondary scenario of $4,500 also on the table. Gold is a store of value that does not rely on institutional trust, the team noted, suggesting the yellow metal could benefit from a world of higher inflation, weaker equities, and a less dominant U.S. dollar. Elsewhere in the precious metals space, silver dipped 0.8% to $40.87 after touching its highest level since 2011. Platinum slipped 0.5% to $1,415.33, and palladium lost 1% to $1,136.26. All eyes are now locked on Friday's U.S. non-farm payrolls, expected to show 78,000 new jobs versus 73,000 in July. A weak print could add fuel to the rally and set the stage for another historic chapter in gold's glittering run. Fed plots the future of payments. Innovation conference set for October. While investors are busy speculating whether the Fed's next move could catapult gold toward $3,800 or even $5,000, the central bank has another big project in the works: the future of money itself. On Wednesday, the U.S. Federal Reserve's Board of Governors announced it will host a Payments Innovation Conference on October 21st, bringing together regulators, academics, and industry leaders to brainstorm how to make America's payment systems faster, safer, and smarter. Innovation has always been a constant in payments to meet the changing needs of consumers and businesses, said Fed Governor Christopher J. Waller, who will play a key role at the event. He added that the conference aims to gather ideas for improving the safety and efficiency of payments while hearing directly from those shaping the future of the payments ecosystem. The timing couldn't be more interesting. Around the world, central banks are experimenting with digital currencies. Fintech firms are racing to launch new payment apps, and instant transfers are quickly becoming the norm. From blockchain to AI-driven fraud detection, the competition to build the next-generation payments infrastructure is heating up, and the Fed clearly wants the U.S. to stay ahead of the curve. The October 21st event will be live-streamed on the Fed's website, giving the public and market watchers a front-row seat. More details are set to roll out soon, but one thing's for sure: the Fed isn't just setting interest rates, it's also trying to reinvent the way money moves. While gold shines, oil stumbles. OPEC Plus meeting looms large, according to Reuters. The shine in gold is a sharp contrast to oil's current stumble. Crude prices slipped for a third straight session on Friday, setting up their first weekly loss in 3 weeks. Brent crude futures dropped 35 cents, or 0.5%, to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI fell 33 cents or 0.3% to $66.64 a barrel by 0810 GMT, while U.S. West Texas Intermediate WTI. Trump eyes Pentagon name change from defense to war. In a move that is already stirring debate, U.S. President Donald Trump is preparing to sign an executive order that would set in motion a plan to rename the Pentagon. According to senior White House officials quoted in American media, Trump wants the Department of Defense to once again be known as the Department of War, aiming to project a tougher, more hard-edged image of U.S. military power. The announcement is expected Friday afternoon, though the White House daily schedule offered no details on the subject. While an executive order cannot legally change the department's name without an act of Congress, the order would launch the bureaucratic process, directing the Pentagon to prepare for the shift. The history is notable. When the U.S. Constitution took effect in 1789, the department was indeed called the War Department. That title remained until 1947, when, 2 years after the end of World War II, Congress renamed it the Department of Defense as part of a broader post-war restructuring. Trump's plan, therefore, would revive a label not used for nearly 8 decades. Supporters argue the change would send a message of strength at a time of heightened geopolitical rivalry. Critics, however, say it risks sounding aggressive and undermining the defensive posture the U.S. has long claimed on the world stage. Whether or not Congress embraces the idea, one thing is clear. Trump is once again reaching for symbolism as a way to reshape America's institutions and its image abroad. Watch out. LinkedIn. OpenAI wants to be your job matchmaker. According to CNBC, OpenAI, the company behind ChatGPT, isn't just building chatbots anymore. It's now aiming straight at the world of work with a brand new AI-powered jobs platform that could shake up how people get hired. And yes, that might mean stepping directly onto LinkedIn's turf. The project, dubbed the OpenAI Jobs Platform, was unveiled Thursday by Fiji Simo, OpenAI's head of applications and former Instacart CEO, in a blog post. Her pitch? This isn't just another corporate recruitment tool. Importantly, the jobs platform won't just be a way for big companies to attract more talent, she wrote. It will have a track dedicated to helping local businesses compete and local governments find the AI talent they need to better serve their constituents. OpenAI confirmed to TechCrunch that the service is expected to roll out by mid-2026. The idea? Let AI play matchmaker, connecting the right candidates to the right companies faster than ever. Of course, the timing is fascinating. Microsoft, OpenAI's largest investor with a reported $13 billion stake, already owns LinkedIn, the world's go-to jobs network. And, in a spicy twist, Microsoft labeled OpenAI a competitor in search and news ads in last year's filings. Now, OpenAI could be edging onto Microsoft's career turf too. Awkward. But that's not all. Alongside the jobs platform, OpenAI is also launching a new certification track via OpenAI Academy, an online hub for workers to learn how to use AI on the job. Think LinkedIn Learning, but with an AI twist. Bottom line, OpenAI isn't just reshaping how we work, it may soon reshape how we get work too.